A warm welcome to all of you to the Gold Economic Forum, the role of gold in reshaping the global economic order, brought to you by ASSOCHAM. I'm Manisha Dhawan, your host for the day. For an uninterrupted experience, I would request all of you to please switch off your mobiles or turn them onto airplane mode so that there are no interruptions when the speeches are going on. And to kickstart the proceedings, we will like to start by lighting the ceremonial lamp. For an auspicious start to the event, I would request our esteemed dignitaries to please come forward and light the ceremonial lamp. I would request Mr. Murugan Paranjpe, Chairman, National Council on Commodity Markets, ASSOCHAM, to please accompany our chief guest, Mr. Alok Kumar Chaudhary, Managing Director, State Bank of India, to light the ceremonial lamp. I would request our other dignitaries to also join in. Mr. Arvind Kumar, former Senior Economic Advisor, Government of India. Ms. Ronak O'Connell, Head, Precious Metals, Stonex, London. Mr. Suvankar Sen, Co-Chairman, National Council on Commodity Markets, ASSOCHAM. Mr. Somasundaram PR, Regional CEO, India World Gold Council. Mr. S.C. Agarwal. I would request Mr. S.K. Jindal to also please join in to light the lamp. Today we have a special candle to light the ceremonial lamp. This is the Bee Celebration Divine Lotus candle that we are using to light the ceremonial lamp. The lotus is the favorite flower of Ma Lakshmi, and to invoke her blessings, we are using the Divine Lotus candle to light the ceremonial lamp. Thank you all for initiating this auspicious start to the conference. I would request all of you to please take your respective seats on the dais. I would request Mr. Paranjpe and Mr. Surankar Sen to please accompany all our dignitaries on stage, and I request all of them to please take their place on the dais. We are very grateful to our dignitaries for taking the time out and coming here and sharing their expertise with all of us. I would request Mr. Murugan Paranjpe to please welcome our chief guest, Mr. Alok Kumar Chaudhary, Managing Director, State Bank of India, with a bouquet of flowers. Thank you so much, sir, for sparing the time to come here. Banks have a very important role to play in the gold economy of our country, and as the leading bank of our country, we look forward to your views on the entire state of affairs. I would now request Mr. D.S. Rajora, Assistant Secretary General, ASSOCHAM, to welcome our dignitaries on stage. Sir, I request you to please present a bouquet to Ms. Rona O'Connell, Head, Precious Metals, Stonex, London. A bouquet for Mr. Shivanshu Mehta, SVP and Head, Bullion, MCX, Multi-Commodity Exchange. A bouquet for Mr. S.R. Jindal, Chairman, Jindal Group of Companies. Mr. S.K. Jindal. Bouquet for Mr. S.C. Agarwal, Senior Member, Managing Committee ASSOCHAM and CMD, SMC Global Securities. Would request you to present a bouquet to Mr. Somasundaram P.R., Regional CEO, India World Gold Council. And please present a bouquet to Mr. Murugang Paranjpe, Chairman, National Council on Commodity Markets, ASSOCHAM. And a bouquet for Mr. Suvankar Singh, Co-Chairman, National Council on Commodity Markets, ASSOCHAM, and Managing Director and CEO, Senco Gold. Thank you all for sparing the time to come here. Now, gold is an integral part of Indian society and a foundation of wealth and savings in our country. At about 24,000 tons, Indian households hold the largest stock of gold in the world. No celebrations, whether it's a marriage or a festival, is complete without adorning gold or even buying gold. The yellow metal is considered the best hedge against economic slowdown, where other asset classes like equities or government securities may give not so impressive returns. And at a time when we are seeing increased geopolitical tensions, indiscriminate money printing by central banks, and steady depreciation of the Indian rupee, local prices of gold may not correct significantly. So that is something, a good reason for people to hold on to gold. And do keep in mind the gems and jewelry sector of our country is an important one, contributing about 15% of our total merchandise exports and employing more than 4.5 million people. Over the day today, we will discuss the financialization of gold, its standardization and benchmarking, and making India the market maker for gold jewelry in the world. I would now request Mr. Murugang Paranjpe, Chairman, National Council on Commodity Markets, ASSOCHAM, to please address the audience and welcome everyone. Please put your hands together for Mr. Paranjpe.
Good morning, everyone, and a very, very warm welcome to all of you, and a very big thank you for really filling this hall on a nice morning here in Delhi. The biggest welcome is to my co-panelists or fellows on the stage, starting with Alokji. And Alokji, thank you. You made it at 3 a.m. in the morning, so thanks for coming in. Also, Rhonda, Som, Jindal Saab, Suvankar, and of course, Shivanshu. ASSOCHAM has had this event every year, and I really consider it a flagship event for two reasons. One, the fact that we all keep saying that all that glitters is not gold. But on the reverse, gold has always glittered as probably the best commodity that we've had when it comes to every aspect of the commodity markets in India. As the ASSOCHAM chairperson for commodity markets, I therefore feel extremely honored that we are back again. We are now back to this physical format after, I think, this is the second or third year now we're doing it. What really is important is we get a whole host of people, starting from the banks to the regulators to the market players. And given the importance of gold, it has A, been the best hedge, B, it is counter-cyclical to all other assets. And in the most recent times, it has proven to be the best way of actually creating value as well. So I think there are many reasons. And every year when we meet, I think we have hopes for something more for the next year. The last year, and I have another colleague, Ashok is here, India has, I think, been stellar when it comes to creating platforms, and in that sense, what we've done in IIBX is also a great achievement. So I think we have a lot to talk about. We have some amazing experts and people who have extremely deep knowledge of this subject, and therefore I wish all of you an extremely successful day today. I wish that at the end of the day, like every year, we are able to come up with some very concrete suggestions which we can take to the regulators and to the government to further the interest of the bullion industry and make bullion and India's place in bullion a permanently big, shining gold standard, if I may say so. With that, welcome to all of you again, and over to the day's proceedings.
Thank you, sir. We will now like to release the ASSOCHAM report. I request our dignitaries on stage to please do the honors and release this study. This is, of course, a treasure trove of what is happening in the gold markets in our country, and goes into a lot of details and analysis of what potential exists and how we can seize that opportunity. So thank you all for releasing this report. I would now like to request Mr. Somasundaram PR, Regional CEO, India World Gold Council, to please give the industry address. Please put your hands together for Mr. Somasundaram.
Good morning, everybody. It's, as Mrugank rightly said, it's always a pleasure to be speaking at this event. ASSOCHAM event now, we have been associated with this for several years, ever since I joined the World Gold Council, which is almost a decade now. And we always look forward to it. Of course, it always used to be held in August. This time it has become December for very valid reasons. But it is something we look forward to. Other than 1 year when we did not have it during COVID, I think we have had it, even the second year we had it online, etc. Something it's very interesting to bring people together, talk. Yes, there is always a feeling that, look, we talk amongst ourselves. Of course, there are policymakers. Today also there are, people from outside the industry who are going to give their perspectives. But, where does it all take us? So, as I complete almost my 10 years and I just reflect on how I came into this industry and what has happened to this industry, how it was perceived, how it's being perceived now, etc. Just a few facts. Last year, excuse me, central banks bought around 1,000 tons of gold after a very, very long time. It was the highest ever, even higher than what it was during the gold standard. 1,000 tons, various central banks, 1920, again, they bought a large quantities, but this was like over 1,000. So that was 650 tons and now 1,000 tons. So central banks have become very active in gold, in diversifying their reserves. And so therefore, they see some obvious value in making sure that gold is part of the portfolio. So that's a very important thing and very good for gold. Indian demand continues to be around 700, 800 tons. After demonetization, it has dropped from that 900 levels. The new gold demand is continuing around 700. But when you say 700 tons, prices have doubled. In fact, yesterday, the sovereign gold bond, the first tranche was matured, and people got double the money, more than double the money at tax-free rate. So if you really look at the 700 tons that we were buying in 2015 and the 700 tons we are buying now, we are actually putting twice the amount of money to buy the same quantity of gold. That's very, very important to note. And this is just pure gold, not even talking diamonds, we're not talking about it. That's the amount of savings that is going into gold. So how relevant is it for the consumers, for the financial services itself? Because there are people always complaining that had this not flown into gold, had it flown into stock markets, stock markets will be good. Well, there are different views in this, because gold actually is a very good diversifier. The moment you get gold, it actually de-risks your portfolio, which means you are able to take more risk. So the way of looking at gold investment should be, when somebody invests in gold, his ability to invest in stock market goes up substantially. It's very important to note that, because at the end of the day, you cannot have a portfolio with just one asset class, because there will be risks in this. So gold is an excellent diversifier. That way, Indian households are well set to play a very active role in the equity markets as our economy grows. But for that, gold needs to continue to play its role, which means it has to become a lot more transparent, etc. Third, the number of people employed in this industry. I mean, it runs to millions, 6, 7 million, various estimates. Unfortunately, this industry is very unorganized, I would say. Although there are organized players like Shivankar Sen and Tanishq and Kalyan, everybody now is going into an IPO. And when these get oversubscribed, it tells you what the consumer looks at this industry for when you have good governance. So it's very, very important to say what kind of value you can create when there is governance. So, and we have had some good reforms like hallmarking. We never thought for 20 years hallmarking will ever be a reality in India. Today we have hallmarking, not just hallmarking. We're the only country in the world where you can actually track every piece of jewelry that has been hallmarked with a HUID, unique identification number. There could be arguments about it, good or bad, because people feel that it could be traceability, tracking system, but it's not true. You could track it even in the previous system. I always tell people, this is technologically enabled now that you could just have a code which you can check and see who hallmarked it, who manufactured it, who sold it. Brilliant system. I don't think any other country has the system. In fact, people are always talking about bar traceability in the world. We've got unique pieces of jewelry traceability in India. Amazing things that we have done. Demonetization went through. It had its impact on the industry. It made the industry a lot more organized. GST, we never thought this industry will ever adapt to GST. Such an unorganized industry. Wonderfully assimilated. Wonderfully assimilated. So there are some successes, but there are also things that haven't moved. We still continue to be, debating about them. As for instance, the gray market is still active. Let's be very clear, with the high duty, the gray market is active. Although gold prices have gone up, as I said, now it's around $2,000. 62,000 rupees is the amount people put for a 10 gram of gold. It's not a small amount of money. It's higher than any iPhone, actually. But when you are going for an iPhone, you don't mind saying, I absolutely need the IMEI code, I want the invoice, I want it, everything. But when it is gold, there is still that possibility that, okay, I'll pay cash, I don't need a thing, can you give it to me at 58,000 rupees? Actually, that still continues to drive the industry. Industry practices, as I said, on the one hand, we have organized players growing. On the other hand, we still have practices which don't give a good image to the industry. If you ask, we have a chief guest who is from one of the best banks in the globe. Ask them, any banker will tell you that the moment you start talking about lending to anybody in this industry, it is high risk, because that's the way the industry has projected itself. We deal actually in money. Gold is money. Yet, when it comes to bank facilities, when it comes to dealing with banks, in fact, Reserve Bank is so touchy about gold and banks getting into gold, because the image of the industry continues to be one of opaque industry, contrast, you can easily lose money. Now, is that the thing that we want when the world is moving towards ESG and others? So all these, I am here just to say that, look, there are a couple of successes we have had, wonderful successes, in fact, something more than what we even thought, but there are areas where steadfastly we are stuck in the mud, absolutely, like cash transactions, governance in many, many areas, treating the karigars. Read the Niti Aayog report on artisans. It is definitely not something we can be proud of. I'm not saying that the organized players are having the best practices, but then there is a large section which these benefits don't flow. So we need to therefore bring the next phase of reforms in the industry. What is in it for the next phase? I think we have got a good set of reforms. What should we do in the next phase when the world and India is actually talking more boldly and ambitiously about ESG, about digitalization? Many, many things that we thought were not possible are now being made possible. So the industry also needs to open up, probably embrace what are the new areas that are coming up, and more important is innovation. Again, this industry has done quite a bit on innovation, but still, if you see as a large industry with 700 tons, 30,000 tons of stock in the Indian households, which is about $2 trillion, $2.2 trillion, an amazing amount of money that we have. Have we done enough on recycling? Have we done enough on innovation? Or are we simply still saying we will bombard the consumers with designs and they will choose? Or are we now being focused? That is obviously many things. I know cliche terms now, artificial intelligence, et cetera, but we still, when you go to a store, we just look at, thousands of, designs just to sell a particular design. Is that how we want to do it? Where is innovation in this industry? Should this industry not be amongst the best in innovation, whether it be in financial and using fintech, or it be in designs, et cetera? So all these, I think there are panels which we'll discuss. We can obviously continue the debate, but in my view, as I see it, in the next 5 years, this industry is set to change in a very, very big way, in ways that we probably haven't imagined. It's also the fact that as we get a new government when I say new government, the new, this thing after the elections, this government is obviously going to have a lot more focus on digitalization and how to mainstream gold. So this industry should be prepared, and we should actually go to the government ourselves with the next set of reforms and probably bring a greater value to the consumers. Because at 60,000 and 70,000, it's a serious investment for a household. You cannot now cheat them with impure gold or invoiceless things, etc. So with those, I think we are going to have a very good day. And I'm, again, very pleased to be here. I'm also part of some panels. I'll try and share my thoughts. But welcome to all of you, and thank you for being here. And thanks, ASSOCHAM, for organizing this. Thank you.
Thanks, sir. Indeed, that stock of gold in India is a huge one, and let's see how it can be best utilized. I would now like to request Mr. Suvankar Sen, Co-Chairman, National Council on Commodity Markets, ASSOCHAM, and Managing Director and Chief Executive Officer, Senco Gold, to please address the audience. Please put your hands together for Mr. Sen.
Good morning, everyone. Welcome to the 15th Gold Economic Forum by ASSOCHAM, and as a co-chair, it's really a pleasure and honor to welcome all of you and everyone on the dais. Gold has been an important part of our country, socially, culturally, for many, many years. While I was sitting on the dais, I was just wondering, just as in the dollar we write, "In God we trust." In India, I think the way we have seen the consumers behaving over so many, many years, it is like "In gold we trust." It's like a God with a L. And it's the love for gold is what is driving our Indian economy over so many, many years. If we look at it from a consumer perspective, we call it the Sridhan, but today, with the women becoming more and more independent, the Sridhan continues to remain, but it is now a dhan that can be utilized for the household as well as for the economy as well. With what we see, the various initiatives that are being taken by all the stakeholders, be it the government, be it the banks, be it the retailer, the manufacturer, I think that as Mr. Somsundaram was saying, that yes, a lot has been achieved, but a lot can be done more. In my journey over the last 15 years, say 2007-8 is when I joined business, and that was the beginning of the world economic order changing as well. We saw the financial crisis coming in the US. It was 6,000 or 7,000 rupees for 10 grams in that 2007-8, and that was the same time I joined business, I got married, and today, in the last 15 years, we have seen that the price of gold has gone up 10 times. So it has created wealth for the people who have been holding gold, for sure. But today we are seeing that this last 15 years, as we speak of the global economic order, it's also been with the rise of gold as a price, as an asset, it has been the rise of our country as well. So if we connect the two, that what is it that has been changing over the past 15 years, it is the change in which we as an economy, as a country, has also been growing with the rise of gold. And if you go deeper into it, as Sir was saying, that 25,000 tons of gold that is there in our economy has been one of the major drivers. Maybe we do not look at it in a conscious level, but at a subconscious level, at a deeper level, it has been one of the major drivers, along with the population, along with the way that we as a country has been productive, and also the world is looking at us as a country that has the great potential and future to grow continuously over the past 15 years. Gold continues to play a very important role in building the strength for our nation, for our country. So as an industry, as a stakeholder, I think what we all need to do is, the way we have always had so much love and respect for gold, we have to take steps to preserve the sanctity and to ensure that the industry and the members who are associated with the industry are looked with the same respect. And as we see, trust is something which is core to the product. And also as a stakeholder, each and every one, if you look at the karigar, the manufacturer, the people who are serving, the banks, it is that trust which we need to continue to build upon through various measures, through various initiatives. And let me assure you all that change is happening. Just to see from a retail perspective, in the last 2 years, we have seen that in our transactions, gold exchange has become a very, very important part. With the HUID coming in, we have seen 25% increase in the old gold exchange that consumers are doing. They are exchanging their old jewelry that have been bought from, their family jeweler or other places. And now the consumers is looking to buy jewelry which HUID, which more transparency, with more billing. So there is a change that is happening at the consumer end. And for all retailers, as we see, whatever data is available, almost 25 to 30% of the transactions that they are doing is the exchange of old gold. So here we can see that, as Somsundaram sir was saying, that gold is not just like a commodity, but it is like a currency. And people are utilizing whatever they have as an asset to buy new products. There might be a shift happening from gold to diamond. There are the trends that we see that, yes, along with 22 karat gold, with the young generation coming in, there is a requirement for 14 karat gold, 18 karat gold to support the various other studded jewelry that we see. But gold continues to remain in the mind and in the heart of the consumer. That is one. On the second aspect of it, the karigars, as we talk about, there have been a lot of steps taken by the industry to ensure that the karigars continue to improve their living conditions and their working conditions. And maybe the speed is slow, be it the organized players are taking a leadership stance, but there is change which is happening. What we see 15 years back and what we see 15 years now, we are seeing that the condition of the karigar, the new generation, the children of the karigar, there are challenges that we are facing, that they are in the dichotomous phase, that whether we should join back the business, whether we should continue to be an artisan, or should we join any other industry. And there are steps of training, of evolving, of giving them better conditions so that we can continue to preserve the art. But there is a social impact that we see, and work is being done towards that. If you look at the manufacturers, if you look at the traders, with the onset of GST in 2017, there is a shift that we see from the unorganized to organized. But it is not just the organized players who are adopting technology, who is very in control of audit and ensuring that all the rules and compliances are being met. It is not that only they are growing, but the unorganized sector is also evolving and changing and becoming more and more organized. So there is a change in mindset, the attitudinal change of all the industry players, what it was 15 years ago, and now there is a drastic change, but more work has to be done. There has to be steps that are being taken and will have to be taken more and more to keep on changing the mindset, so that we as a product, as a commodity, with so much respect that we've already had, but with the changing times, ESG, as we have spoken about, environment, social and governance, there needs to be more transparency. Yes, there are products of digital gold that has come in for the new generation. There are lightweight products that are being created so that consumers can continue to buy jewelry with gold in it. There are initiatives that are being taken by the government, that the gold that is there in the household is being given to the banks, loans can be taken against it, and the economy continues to run its cycle. The volatility of gold is one part of it, but the velocity of money that the gold can generate is also being ensured, and that will indirectly help the economy to continue to go forward. And I think that with the strength that we have, with all the accumulation of gold that the country has done over so many years, it is time that now this gold will attract all the investment, will attract all the interest of all the various investors across the world, and our country will continue to grow. So we are utilizing this forum and to exchange ideas, to learn from you, to share the ideas of the various panelists, to get their ideas, and finally have a way forward, that as the country progresses and we see that the golden years of the country of the next 15, 20 years, we as an industry, what role we can play and how we can contribute to the growth of the nation. So with this, I would like to thank each and every one of you for being a part of this August presence, and we sincerely hope that we can add value to all of you and add value to the nation. Thank you very much.
Thank you, sir. We are very happy to inform you that we have with us Mr. S.K. Jindal, Chairman of the Jindal Group of Companies. The Gold Economic Forum was started under the leadership of Mr. S.K. Jindal 15 years back as a chairman of the ASSOCHAM Gold Council. Thank you so much, sir, for your leadership, for your direction, for your vision. And I would request all of you to give Mr. Jindal a huge round of applause for all the leadership and the vision and the direction he has given to this forum. I would now request Mr. Jindal to please address the audience. Please put your hands together for Mr. S.K. Jindal.
So no free lunches. Everybody has to earn his lunch. Thank you very much. ASSOCHAM, I've been with ASSOCHAM for last 30 years now. 1995 I joined ASSOCHAM, and for last 30 years I've been working with ASSOCHAM. Gold, as I look at, we started, one of the thing was gold, and then we were doing mutual fund also, capital market, those things. Different committees I was chairing at the time. Today I see it is the 15th conference. The first one, Mr. Kamalnath agreed to inaugurate it. At that time the importance was much more because we were coming from a very blind area to a very lightened area, and nobody knew that gold is all legalized. At that time everybody knew that gold ban is still continuing. So it was a very difficult time, and we at ASSOCHAM knew from the very beginning that as much as we will make the rules enforceable, we'll make the platform strong, we'll make the rules and regulations strong, the business will grow. The same happened in every field, including mutual funds. Earlier, mutual funds was not people had that kind of conviction with, but today everybody has a great conviction and money is flowing into mutual fund automatically. It is coming from all sorts and nobody has any questions on that. Before 2003, there were no international exchanges for such commodities, and local exchanges were running the business. Potential to grow was very, very limited, and potential to lose was much more, because these were run by brokers of the area. So always we had tussle with them, and one cannot do. And when MCX came into being, NCDX for agro-commodities, they started, then we realized how the business can grow. And from there onwards, I never saw anything ever happened wrong in MCX or NCDX. There were some quality issues on agriculture, but MCX, no, because gold is gold. The product they were handling was that super. Just now, Mr. Shivanshu told me that gold future is increasing, growing 20% year on year, but options has grown 500% in 1 year. 500% in 1 year, gold option has increased. And I have a strong faith for gold, for example. In last 6,000 years, the importance has always increased. The significance of gold has always increased. Just now, Mr. Somasundram also told, central banks are also participating in a much bigger way than before in gold, acquiring gold. So these are the things which I wanted to share with you, and I have seen that gold, if you keep with you, it gives you a return of 8% on longer terms. You keep it for any 10 years you see, it has given a growth of 8%. It might not have given year to year, but 8% annualized. Any 10 years you count. 8% annualized is a wonderful return where the asset is with you. You don't have to ask anybody, you don't have to depend on anybody to get it back. Asset is with you and you are still doing good. So that is the kind of beauty. Only gold has this beauty and the liquidity. It has exceptional qualities which are magical in nature, I would say. Very easy to handle if you handle properly. And now if you don't want to keep gold with you, you have sovereign gold bonds. They give similar return or even better. And you don't deal with the gold itself. You have no worries on keeping the gold. Here also, I would say that if, like Mr. Somasundram says, if we make it more reliable, more stronger systems, although what has happened is also amazing, the kind of technology, with the technology we have gone and the kind of hallmarking has been done and all those things, they have reimposed our faith into the product. Earlier, which was missing, now people talk before buying what purity it is. Earlier, it was not happening. Only they were buying from their known sources of family jeweler will sell them, and that family jeweler was doing anything and everything what was possible in favor of the jeweler himself. So, put together in the last 10 years, I congratulate and I compliment Mr. Somasundram also. He has put in very hard work to bring it on straight line, and he always had all the organizations who were doing the same, who were running the same cause in their organization, and that is how we have been able to reach today's stage. So gold, according to me, will always have a very, very important place in people's life, and it will not lose its significance ever, because in last 6,000 years it hasn't lost. World over people recognize gold and they have faith in gold. So this is a commodity which you are dealing with, and I compliment each one of you that you are associated with gold business in one way or the other. Keep continuing dealing with it. It has tremendous potential. Thank you very much.
Thank you, sir. I would now request Mr. S.C. Agarwal, Senior Member, Managing Committee, ASSOCHAM, and CMD, S&C Global Securities, to please address the audience. Please put your hands together for Mr. Agarwal.
Good morning, everyone. First of all, I would like to congratulate Mr. Rajora and his team and ASSOCHAM for organizing this 15th World Economic Forum. And when I see the list yesterday, Mr. Jindal was missing. So I thought gold convention is there and Mr. Jindal is not there. So I was thinking, because I have, whenever ASSOCHAM is organizing any gold summit, Mr. Jindal is normally there as a speaker in the inaugural session. So when I came, I saw him, I feel very happy. So, Mr. Jindal. And everybody, since morning I am listening, telling gold is very important for Indian society. We are seeing it as a ornament, as a status symbol, as an investment, and so it have many uses. we have seen that people are investing in gold, their good saving. So there can be various ways. Either you buy physical gold, or you invest in gold ETF, or sovereign gold bond. So these are having its own merit and demerits. If we buy physical gold physically, we have to incur cost for storing it, insurance, safety, and so many others. If we don't, we should buy as a investment. If it is ornamental value, then we have to buy physical gold like Stridhan. So if we and in the same way, gold ETF is there. Mutual funds are managing gold ETF. So it you have not to worry about its safety, because you have buy a gold ETF. It is in demat form, and no benefit of all taxes like capital gain, long term, short term is always there. But one more additional benefit is that if you hold in gold ETF, that wealth tax is not being attracted in it. So that is more beneficial if you buy as an investment. And one more avenue is there to buy sovereign gold bond. And that is fixed for 8 years. Maturity period is 8 years. Redemption can start after 5th years. And every year it gives you 2.5% interest, you can say. So that is additional. And a sovereign gold bond holder will be entitled to the value of the prevailing when he is taking the redemption. So that benefit is always there. So if you are a long term investor and you are buying for investment, so I can say sovereign gold bond is a better option. And as Mr. Som Sundaran has said, even Federal Reserve governments, they are also buying to diversify their reserves. Because in 2008 we have seen gold prices has increased after default US crisis. And then countries realized, even Middle East countries has bought, their government has bought gold as a reserves, and Europe, who was selling at that time, they stopped selling gold. So, and recently many governments has purchased gold to diversify their reserves. As we know that government has increased custom duty up to 15%, and excise duty again 3%. So it is it costs around 18.45% when you buy a gold, physical gold. And in the same way, when somebody is buying dore, it's 17.45%, 70.57%. So buying gold, because India needs around 700-800 ton gold every year, and we don't produce that much gold every year. So lot of gold we import. So it becomes a burden on the fiscal deficit. It increase our fiscal deficit. So government enhanced the custom duty. Though that was the logic of the government to enhance it. And I can say we are having lot of speakers, and we will throughout the day this convention will go. So we will be benefited by their wisdom. So it's a very good. Once again, I can say congratulations to ASSOCHAM, and I thank you very much for listening me. Okay, thank you.
Thank you, Mr. Agarwal. I would now request Mrs. Shivanshu Mehta, SVP and Head Bullion, Multi-Commodity Exchange of India, MCX, to please address the audience. Please put your hands together for Mr. Mehta.
It is indeed a privilege and honor for us to address this august gathering of international as well as domestic members of the bullion and jewelry fraternity. Ladies and gentlemen, a leading exchange of bullion in a country which is arguably the largest consumer of gold in the world. We see ourselves more as a partner in progress, serving the needs of the bullion and jewelry industry. And over the years, it is an honor to maybe state that we have created what can be called a domestic price benchmark, which serves various needs of the industry. Primarily, we serve the need of the bullion and jewelry industry of risk mitigation via our prices, which cover custom duty tariffs, international gold prices, as well as the exchange rate. And as Som pointed out before me, financialization of bullion as an asset class is something which the exchange always strives to fulfill through various new products and categories and segments that create both trading, hedging, as well as investment opportunities. The third important key tenet is that it is also a place for quality assured delivery of gold. Over the past few years, and more so over the very recent few years, both regulators, SEBI as well as IFSCA, have come across and through a slew of positive regulatory changes, really set us on a path of accelerated progress while trying to achieve the aforementioned goals. SEBI has introduced futures, options, indices, as well as ETFs and mutual funds based on commodity derivatives. And very recently, foreign portfolio investors have been permitted into cash-settled contracts, and the industry does hope, and I can see a lot of people here, including Pawaniji, etc., who are from the nearby regions with companies that feed gold into India and into the region and play an important role. We sincerely hope that at some stage, this would also be permitted for the gold and silver contracts that we have. Now coming to the IIBX, it has been a sort of a milestone achievement where 5 different market intermediaries, including MCX, NSE, BSE, via INX, and CDSL and NSDL, have come together to create a platform which doesn't compete amongst each other, but competes with the world. And we are happy to note that after the various contracts that have been launched and that are going to be launched, IIBX is showing signs of initial progress in terms of deliveries. And it has also set a benchmark in terms of the smallest window of time where a bullion depository receipt can be created, extinguished, and the gold delivered after paying the duty into the country. So these are some of the milestone achievements, and I speak also on behalf of IIBX, representing MCX on the board of IIBX, and Mr. Ashok Gautam is also here. He will take us through further details. Having said that, our contribution is like chasing an ever-moving target. As they say, excellence is an ever-moving target. We have tried to serve the Indian gold refiners segment by having created the MCX good delivery norms. Hitherto, only LBMA gold before 2021 was deliverable, but under the MCX good delivery norms, we have impaneled 6 refiners who represent the top most quality refining of the country through a strict audit process. And I'm happy to state that in line with the Atmanirbhar Bharat vision, about 7.5 tons of Indian refined gold has been delivered at MCX over the past 2 years or so, valued at more than 4,000 crores. So somewhere this will address the the dependence on import, it should come down. Recycling will improve via this measure, and the disparities which we often see will definitely improve, going forward as more and more gold, as Suvankar was also saying, and I know this, that the old gold exchange model is a very key factor where the organized leading jewelers play an important role. Similarly, this would play a role to bridge this kind of a gap. And let me tell you that some of the leading jewelers have actually delivered bullion also during the COVID period after converting it into exchange good delivery. So these are some of the things, but the most remarkable development which Mr. Jindal mentioned was the advent or the coming home or the coming of age of options as a product. It was in Delhi in 2017 when we launched gold options at that time. Arun Jaitley ji had launched this product. We have very fond memories. So in this journey of 6 years, today gold options is doing about 5,000 crores of turnover per day. And it has gone up 5 times, as Jindal Saab said, over the past 1 year. So it just evidences that jewelers are treating this product as it should be treated, as it should be used as an insurance cover to protect the downside, to protect the inventories, while remaining open to the profit on the upside. And this also applies to the retail clients who are using this product ahead of macroeconomic events. So the design purpose we see and we hope is being met. Of course, options has set certain records. 5,000 crores is a single day average, but it has touched 33,000 crores as a high during this year, and silver 16,000 crores. Now, we have seen overall deliveries of about 4,000 tons of silver and 139 tons of gold. Now, going forward, since we are here, part of this conference, the main purpose is to address the asks as well, not only where we have come till now. And I dare say there are a lot of asks we really need to concentrate on together. We need to put our minds together. The electronic gold receipts, EGR, represents a product which can really be the backbone of financialization of gold. It can be the unitary product which can be used by mutual funds, by all other devices that there are, because it's organized, it's regulated, it is unitary, it is electronic, it can be accumulated, and so on. So we need to work on the GST issues, which are not yet allowing it to become what it can become together. And we need to look at the participation of banks in the domestic commodity exchanges, as well as on the IIBX as trading members, because banks represent a pool of liquidity which actually creates a healthy order book into far-dated contracts. We need to hope for FPI in gold soon. That's the foreign portfolio investors. And we will definitely serve the industry with newer and more innovative products as we go along. So I'll sign off here stating that we renew our resolve to serve the bullion and jewelry industry as MCX right here. And thank you so much.
Thank you, sir. I would now request Ms. Rona O'Connell, Head Precious Metals, Stonex London, to please address the audience. Thank you so much for coming here all the way from the UK. And we look forward to your insights on how you see India as a market maker in the international gold market.
Thank you. Good morning, everybody. Welcome. And may I say how very grateful I am to ASOCHAM for offering me the opportunity to speak to you once more, especially in your beautiful country. I just wish I could stay here for longer, but it's good to be here in the first place. I started working in the gold market in 1981, and I was working at that point for Consolidated Goldfields, which was the world's second largest gold miner behind Anglo American. And the vast majority of Goldfields' gold production at that stage came from their South African subsidiary, GFSA. And the reason I mention that is that we were talking about in God we trust, in gold we trust. The International Gold Corporation, which was the forerunner of the World Gold Council, was based in Johannesburg. And every time any post came into our office from GFSA, there was a postmark on it saying, in gold we trust. So Intergold, now the World Gold Council, have been running this for a long period of time. But then, of course, as we have already seen, history actually goes back 6,000 years, and it's always been an element of trust. So from an international standpoint, I remember being here with my good friend Sudesh, who I see is here in the audience today, and we went to see MKS PAMP, or Sudesh took me to see MKS PAMP, I should say. And I think this was probably 2011, maybe 2012, and the concept of national hallmarking across India was one of the subjects of conversation. And I remember the chief executive officer of the refinery being concerned at that point that with such a large country and with so many jewelers across such a wide region that it would not be feasible. Well, he was proved wrong, and I'm delighted to say that he was, and indeed, as Som was saying earlier, it's gone beyond just hallmarking. The traceability is probably one of the best in the world now. So that's how I have seen, in part at any rate, the evolution of the Indian gold industry since I first came into the market all those years ago. And there is clearly plenty of potential for more. I am particularly impressed by the fact that India is a leader in many areas, but particularly when it comes to mobilizing and motivating the young, if you like. If somebody says to me, is now a good time to be buying gold, then my answer is almost invariably, it depends what you want. If you're looking for capital appreciation or you're looking for risk mitigation, we are going to have two very different conversations. Because capital appreciation is obviously a question of timing. If you have the patience to last 20, 30, 40 years in the market, you will almost always outperform. And we've already talked a little bit about portfolio theory and how adding gold into your portfolio can improve your rates of return for the same level of risk just by pushing the efficient frontier. But if you're looking for risk mitigation, it absolutely doesn't matter when you buy it or at what price. Because, and again, I raise my hat to the World Gold Council, the amount of quantitative analysis that that organization has done is very impressive in demonstrating the fact that X amount of gold, depending on the composition of your portfolio, will push the efficient frontier so you have better reward for the same level of risk, or if you want consistent reward, you reduce your risk exposure. I mentioned the young, and there are two elements from a Western perspective that I would like to point up here. The first relates to what was being said earlier about attracting younger people with 14-carat, 18-carat gold jewelry, as opposed necessarily to the 4/9 jewelry that we have seen for so many years over here. I can see why that is being done. Indeed, the WGC did it with K-gold, which is 18-carat gold in China some years ago. The purpose being to get people to buy material and then to keep it off the market. Because, of course, if you buy 4/9 or 22-carat, then if you want to resell it, then you will normally realize pretty much most of the value of the contained gold. You will obviously incur a little bit of opportunity cost because you will have paid fabrication charges when you buy it, and you will be paying away refining charges when you sell it again. If, by contrast, you buy 14 or 18, or I'm embarrassed to say in the United Kingdom 9-carat, which is more than 65% copper and should be appreciated as such, then by definition, the value of the gold within the finished piece is diluted because you've got alloying elements in there. And certainly in the West, which you don't have here necessarily, we have wholesale, we have retail markup, we have distribution, we have local taxes and so on. So that if you buy a piece of non-gem set gold jewelry in the United Kingdom and it is only 9-carat, then you pay anything between 4 times and 6 times the value of the contained gold by the time you've actually picked up the piece, paid for it, and taken it home. So you don't sell it back. So Som asked me to maybe take a 5-year view and see what changes would be feasible. Now, I am not here to tell anybody what to do, very far from it. But one thing I would say from my Western experience is that if people are buying jewelry, then they need to understand what it is that they're buying. So if you're buying 22 or 24 carat, then that is investment grade jewellery, and that can be resold without very much dilution in the value of what you've bought. If you're buying 14 or 18, then people need to know that that is adornment grade jewellery, it's not investment. So one of the things that I think we'll be talking about a lot today is communication, education and transparency. And the people in this room are probably the best qualified in the whole of this country to be able to take that forward, whether it's a question of talking to the government and letting the government know what the government needs to know, because certainly in my Western experience they very rarely do. They need the experts to tell them and then to guide them. And at the other end of the value chain, it's very important that people who are buying gold, be it as 14 or 18 carat jewellery, or, and this is the other area where India is particularly a world leader, youngsters who can spend as little as 1 rupee over their mobile phone to gain physical gold exposure need to understand what it is it's doing. So I congratulate you. I think India is doing a wonderful job and deserves to be a world leader. Go out there and make yourselves heard and join with the rest of the Indian gold community in making sure that there is a full spectrum of education right the way across the value chain. Thank you for your time.
Thank you, Ms. O'Connell. We are very privileged to have with us Mr. Alok Kumar Chaudhary, Managing Director, State Bank of India, joining us. Please put your hands together and welcome Mr. Alok Kumar Chaudhary. I would request him to please give the inaugural address.
Distinguished guests, a very good morning to all of you. So out of 6 speakers, and speakers coming from the industry who almost eat, drink, breathe and sleep gold, it's difficult for a banker to add value to the discourses because we deal in money and we also deal in gold. But as I say, the money and money alikes, gold and gold alikes, they're all intermingling in a way that we need to delve deeper into the gold. Now, when I think of World Gold Council meeting, I am reminded of the Buddhist councils. There are almost 6 Buddhist councils in the country in the year where the people assemble to discuss and debate on the cantankerous issues or the issues of dispute in the entire Buddhist theology and the Buddhist practices. One of the Buddhist councils, I remember that 2 out of the 10 disputed items, the 2 disputes were that whether the Buddhist monks, they should accept gold jewelry as an arm from the people, or whether they should also conserve and protect salt in the rainy season in a bamboo, say bamboo carrier. Now today here, the Council meeting which is happening in association with ASSOCHAM, of course there are issues which need to be debated, some sort of action points need to be formulated. In this particular case, I think there are two lines of thought which are going. One is the aspirational or actualization theme, and that theme is role of gold in reshaping the global economic order, which is a higher aspirational theme. There's a lot of crystal gauging, lots of brainstorming to find out as to whether really gold can reshape the global economic order. That is one question which really needs to be debated and understood in this particular meeting and a council's meeting. And of course, the second part, the most of the illustrious speakers who spoke about the reality and the present as to how Indian gold industry, the players in the gold and the gold ecosystem should evolve in order to make the best use of it. So, as I embark today, because it's an inaugural address, so I'll try to give a holistic perspective from the past to the present and the future, and also the role of gold, gold industry in India to really nudge the global economic order. As we embark on a profound exploration into the enduring significance of gold, a precious metal that has not only shaped our collective history, but also continues to play a pivotal role in the contemporary economic landscape. Gold has held a revered position throughout human history, symbolizing wealth, stability, and cultural heritage. Today, we delve into more nuanced understanding of gold, shedding light on its historical role in monetary systems. Furthermore, we'll scrutinize the multifaceted potential it holds to reshape the global economic order. In many ways, we'll also see how India can be the fulcrum in setting up global economic order through gold ecosystem, what all has been done, what all is being done by the economic agents in India. Those will also be forming a part of the discussion today. So when you talk of gold, we can't avoid talking about gold standards. Taking a bit of history, the phrase gold standard evokes a sense of stability in a bygone era where currency was intricately tied to something tangible, universally valued gold. It conjures images of an economic system where the value of currency was tied and pegged to a fixed quantity of gold, maintaining a sense of financial solidity. Yet, the tale of the gold standard is not merely of stability, but a nuanced narrative of strengths, limitations, and transition that shaped modern economies as we see today. Imagine a time when each unit of currency had a specific value in terms of gold, and central banks meticulously maintained reserves equivalent to their circulating currency, and convertibility was the hallmark. You were able to reassure yourself that there's a promise where paper money can be converted into a simmering, solid yellow material. And this system provided advocates with ample reasons to praise its virtue. Price stability, international trade, confidence, and discipline, these were the hallmarks of the gold standard. But as they say, duality must exist. When there's something good, the seeds of its destruction are already there. So the data from the gold standard era reveals a nuanced economic landscape. Stability in certain aspects like price and long-term planning coexisted with challenges. Generally, long-term inflation rates were low or close to zero. Economic growth was almost steady. Efforts to maintain balanced trade sometimes led to economic turbulence due to trade imbalances. Despite stability aims, there were severe financial crises, notably the global Great Depression. The system didn't consistently protect against high unemployment in uncertain times. The fixed nature that provided stability restricted flexibility needed to navigate turbulent economic waters. In view of the challenges which emanated, a shift away from the gold standard became an imperative as rules changed in order to accommodate reality. World War I and the Great Depression were critical periods that strained the gold standard, and abandonment, devaluations, economic pressures, limitations of gold supply, these all raised challenges which led to abandonment of this gold standard. Even after the demise of the gold standard, gold retained its significance. It continued to act as a safe haven during the economic crisis, exhibiting behaviors that made it an attractive investment. Now, let me talk about gold's role in India's social, cultural, economic fabric and the monetary system. India, a land of rich cultural traditions, boasts of a deep-rooted affinity for gold that transcends economic worth. The cultural significance of gold in India is not merely financial. It's a symbol of prosperity, tradition, and auspiciousness. The act of purchasing gold during festivals, weddings, and special occasions goes beyond economic transactions. It becomes a celebration of tradition and heritage. Gold's demand in the form of jewelry, coins, and bars is intricately woven into the fabric of Indian society, making it an integral part of social and economic landscape. The cultural connection not only adds luster to the metal, but also contributes significantly to the economic role in the country. However, there is an exceptional characteristic of gold which is visible to the mankind, particularly in India, is its historic accessibility. Anybody can buy gold. to individuals across income groups. This accessibility provided individuals from all demographic layers with limited financial resources the opportunity to pine for something which is of value and also participate in the process of wealth creation, because this is something which was desirable. The tradition of gifting gold during weddings and financial festivals further strengthens its connection with the broader population, making it just not a financial asset, but a part of India's cultural identity. In terms of the monetary system, gold has played a crucial role in India's economic history. While the gold standard, which pegged the value of currencies to a fixed quantity of gold, is no longer in place, central banks, including Reserve Bank of India, continue to hold gold reserves as a strategic component of their overall reserves. The recognition underscores the confidence in gold as a stable and valuable asset in the monetary system. Now, let me crystal gaze about gold's potential in reshaping the global economic order. There is a view that reshaped global economic order should hinge upon so many things: inter alia, distributed leadership of currencies, the base for sustainable and environmental friendly economic activities. I find that gold has the potential to reshape the global economic order through a couple of ways, through these two desirable states of distributed leadership of currency and the base for ESG or sustainable economy. In an interconnected world, economic ties transcend borders, and gold's role as a common and trusted asset can foster a sense of shared value and stability. As a universally accepted form of wealth, gold has the potential to contribute to a more integrated and cooperative global economic system. With a view to diversifying reserves, lack of counterparty risks, relationship with US dollar, central banks have been buying gold, and they continue to hold significant gold reserves. Reinforcing gold's role in financial systems in recent times, central banks have added historic quantity of gold to the reserves, with a couple of big nations leading the pack who incidentally are leading the de-dollarization move. As inflation and dollars movement continue to impact economies, gold may become more attractive than it used to be. Increasing price of gold is also an indication of the increasingly important role the gold could play in the monetary system. Gold could become more important as a reserve asset, and as central banks diversify from the holdings away from US dollar and other fiat currencies, this could increase the demand and price of gold, as well as its influence on the global economy, leading to a distributed leadership of currencies and nudged geographical coordinates of global economic order. Gold could become more integrated into the digital economy as the new technology platforms enable more efficient and secure ways of buying, selling, and storing gold. This could increase the accessibility and liquidity of gold and its appeal to a wider range of investors and consumers. Gold could become more relevant as a sustainable and responsible resource as the gold industry adopts more environmentally and socially friendly practices and standards. This could increase the value and reputation of gold as well as its contribution to the global developmental goals. In a global context, the formalization of gold has far-reaching implications. When embraced on a global scale, it has the potential to elevate trade efficiencies, establish standardized practices, and ultimately fortify economies. As we explore the prospects of a more formalized global economy, we envision a world where economic transactions are conducted with greater transparency, reliability, and adherence to established standards, leading to the strengthening of global economic foundations. These are just some examples of how gold could affect global economic order in the future. However, the actual outcome will have dependencies on many other factors. Therefore, it is important to keep an eye on the trends and developments of the gold market as well as the broader economic and political context. Now, the concept of green gold is emerging, referring to sustainable and responsible mining practices. Gold mining, when conducted responsibly, can contribute to environmentally sustainable practices Additionally, the economic power associated with gold can be harnessed to fund initiatives addressing climate change. In recent years, we have seen increased focus from growing number of consumers and investors on environmental, social, and governance factors and the sustainability of our planet. An increasing number of consumers and investors want to understand if the products they buy have been responsibly produced and sourced, and if they contribute to societal progress. So in 2019, World Gold Council launched the Responsible Gold Mining Principles, a framework that sets out clear expectations for consumers, investors, and the gold supply chain. Compliance with these practices and principles require public disclosures and external assurance. Most of the major players in the gold are voluntarily complying with guidelines, recycling and refining gold using climate-supporting methods, adding value, and catering to the demands of the world will go a long way in giving support to conserving resources and pushing the agenda of climate protection and disaster prevention. Now, talking about our own country, we are a net buyer of gold, the second biggest consumer of gold, and as they say, 30,000 tons of gold. Now, we have the power to move markets, and whosoever has the power to move markets can change the global economic order. So, from that perspective, we need to become a market maker in the global economy. And many steps have been taken for realizing this ambition of India. The report by Niti Aayog talked about gold exports by way of making India a center for refining raw gold and a hub of gold re-exports by value addition. So when you marry the umbrella theme of this particular council, reshaping global economic order, I think this particular recommendation of making India a center for refining raw gold and a hub of gold exports has a huge critical importance. It also emphasized upon domestic gold monetization so that idle stock can be channelized to productive purposes. India launched its first bullion exchange, and our government also signed a comprehensive economic partnership agreement with the UAE in March 22, which would help the Indian gems and jewelry industries, and we are already seeing the green shoots in this. Government has also undertaken significant endeavors to channelize gold from households into the formal economy. The implementation of regulatory measures, including taxes and hallmark standards, serve as a cornerstone in this process. The aim is not only to streamline the gold market, but also to bring it within the formal economic framework, thereby enhancing transparency, accountability, and economic resilience. Coming to banks. Banks in India are critical stakeholders in the financial ecosystem. They play a pivotal role in the formalization of gold. Their collaborative efforts, whether through structured financial products or other mechanisms, contribute to broader objectives of aligning gold transactions with regulatory standards. The formalization not only ensures the integrity of financial systems, but also fosters a conducive environment for economic growth. Some of the other trends which are visible today eloquently tell the story of evolving gold market. Several fintech startups have entered the gold segment in recent years to disrupt the conventional gold buying and investing behavior. More and more banks are looking to launch their own gold loan products and examining options of collaboration in this space. Now, it's time I talked about SRO and the way forward. Gold is recognized an asset of tremendous worth to pass down in generations in India since ages, and hence SRO builds trust and credibility through transparency, sustainability, governance, and accountability. The fragmented nature of the industry, unorganized with some gaps across value chain, is often at its toes as buyers' preferences change, evolve constantly, and regulatory requirements can at times necessitate readjustments, which the Indian gold industry has acquitted itself well. This brings to the fore critical role of SRO in order to capitalize on the lucrative opportunities emerging hereupon, while ensuring unshakable trust and innate resilience in the ecosystem that bodes well for all. The large number of NBFCs, fintechs, and partnerships with other players incrementally necessitates the need of a vibrant and evolving SRO. Here I would like to touch upon a very important point, because in the gold ecosystem, the jewelers and the distribution ecosystem, the gold, there is a need for change in perception from a banker's standpoint, because often we have found that when we are accelerating the speed of partnering with the distribution ecosystem, suddenly a bump comes here from here and there, and the entire framework of underwriting suddenly gets questioned. And so under these circumstances, for the industry to grow and really nudge the global economic order, it is necessary that industry treats itself as an organic one. Because there are industries in India and there are places in India where no account goes to a default in that particular industry at a particular place, because the entire industry at that particular place ensures that the respect for the industry, the trust in the industry, and the credibility of the industry is not spoiled by a couple of people here and there. I understand that in this particular perspective, it is important that all the barons, gold barons or gold people, experts in the gold industry, they ought to reflect upon as to what can be the ways where the industry displays a repeatable behavior whenever there is a issue of credibility with the other players in the market. I'm sure it requires a huge amount of work and a huge amount of thought in order to come up with something like this. Now, to conclude, gold with a rich cultural significance, financial attributes, and historic role has the potential to significantly contribute to India's growth and reshape global economic order. As we collectively explore the strategic role of gold in addressing broader socio-economic and environmental challenges, as well as the intricacies of the operations of the industry in India, we pave the way for a more sustainable and interconnected global future with India as a jeweler to the world. Thank you for your attention, and may your personal investments give glow to your wealth portfolio in good times and bad times. Thanks a lot for patiently.
Thank you so much, sir. We are very privileged to have with us Mr. Arvind Kumar, former Senior Economic Advisor, Government of India, who is joining us virtually. He has helped us with the ASSOCHAM report that was released at the start of the show, and we are very grateful to sir for joining us. We request him to please give us the highlights of this report in the next 5 minutes. Mr. Kumar, I hand it over to you, sir, to please address the audience. Mr. Kumar, we can see you. Would request you to please unmute yourself and address the audience. Yes, sir, we can hear you. Please go ahead.
Down
Thank you so much, sir, for your valuable suggestions. I would now request Mr. Murugan Paranjpe, Chairman, National Council on Commodity Markets, ASSOCHAM, to please give the concluding remarks in the vote of thanks.
As some of you will note as we move forward in the day, I have the easiest task. I'm going to just introduce people and then I'm going to thank them. I really don't have to take much effort, so really feel very, very happy about doing that as a champ. But really, Som, like always, 10 years and every time you speak, it's something new. So thank you for being with us. And while you did mention about some other plans, like some of us have been saying, you can get out of this industry, but you can't get out of this conference at least. So we'll continue to see you, Som. Suvankar ji, thanks again for your insights. Jindal Saab, big thank you. We were all missing you. As some of us said, it was probably the first dinner we had, which is the pre-conference dinner, and we didn't have Jindal Saab, but you're there. So thanks again for coming. Shivanshu, as always, a lively person, and thanks. I'm sure MCX is doing great work. I have the same fond memories, like you said, we had of 2017 when we launched the gold options. It also tells you how long it takes to build a market, right? I mean, it was exactly 6 years ago, 17th of August, we did that. And it's taken us 6 years, but just look at the volumes that are being done now. So if we have the patience and if we have the right kind of products, we can really create something. So great work from all of you. Thanks, Rona, for being here and spending time with us. And glad to see that you're not jet lagged now. So Agarwal ji, thanks again for joining us. Thanks to Mr. Arvind Kumar. And the last but not the least, to my friend, my colleague on the SBI board, and for somebody who's taken time and made a special effort and really given us a lot of food for thought as we begin today's conference. So Alok, thanks so much. And with this, we'll conclude today's session for the first part. And there's a tea break, and look forward to seeing all of you very soon.
Thank you, sir. I'd request all of you to please be in your seats by 11:50. We have a very important session next coming up, where we'll be joined by Dr. C. Rangarajan, who has been the former governor of Reserve Bank of India and has worked closely with the government for many, many years. You don't want to miss out on even a minute of this session. So please be back in your seats by 11:50.